Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry and today is Thursday, January 5th. The time is 4 a.m. GMT. Today we are looking at the consumer discretionary ETF. This is XLY. Right here we have with one in the intermediate degree ended here at this low around 126. Then wave 2 right now is in progress here. The structure of the rally is in a double three WXY. So the W here is in a 3 waves ABC, and the Y leg is also in another 3 waves ABC here. So looking for a WXY structure here, and it should find sellers right here at 131, 134, which is the 100% extension of the WXY, and from here it should then start to turn lower or extend on the downside right here. So as long as we stay below 146.5, which is the pivot here, we are looking for the ETF to start turning lower again once we reach this area. Okay, so this is the key level 146.50, and this is sort of the estimated short-term resistance based on the WXY here. Now let's zoom out a little bit to get some ideas where we are. I'm gonna zoom out in the daily time frame first. If we take a look at the daily here, we can see from the high in 2021, we continue to make a lower low and a lower high, all up until December last year. Right? You can clearly see a lower low, lower high, which is bearish. We are nowhere near breaking any kind of bearish channel, bearish trend line. So this is firmly bearish without any doubt still. Now, if you want to count this pullback here and using a channel idea, I can draw a channel this way. So this is one possible channel, and you gotta break out here, out of the channel. So that suggests this belongs to the same cycle, and this is in another cycle, right? So you have 1, 2, and then it does a 3 that breaks below the 1. So we have a 3 swing or 3 cycles, a lower low that has not reached the ideal 100% extension, which is over here. I know it is, I mean, 92 is a pretty significant target, right? It's almost like a 30% drop here, more than 30% actually, right? But it doesn't necessarily have to reach exactly 92, but that is the possibility. It can actually go down to 92, and it can continue to go down here, and the rally continue to fail, right? So the sequence, without any doubt, is bearish, and as long as we have not broken above this trend line, then the bearish idea still remains in play in XLY, which is consumer discretionary ETF. Okay, now, so that means any rally, when we see one, it should fail. So any kind of rally, it should fail because the sequence is bearish. We are looking for the downside target is not met. So any rally when we see is gonna fail in the sequence of 3 swing or 7 swing. That's the idea of correction. It's either in 3 swing or in 7 swing, right? So that's what we see here in the 1 hour, looking for 3 swings, pullback, and then another 3 swings. So this is a 7 swing structure, WXY, to fail when the Y is equal to the W, and then from there we might potentially turn lower again. Okay, if I look at the 4-hour time frame and I'm putting back all this count here, 3, 4, 5, 1, and then this 2 in black. So you can see this is 2 in black, 3, 4, 5, this is 3, 4, and then we ended 5 of 1 over here according to this count. So that means I can sort of work back to get an idea where in the position of this pullback. So what we are looking at here is this rally here could be ending already. Sorry, this decline could be ending already in a wave 1, right? And so what we are doing now is we are doing a wave 2 in blue, which is correction of the cycle according to this count. Now, because the cycle is a pretty big cycle, so you got to be a bit careful. Now, if I do retracement, you can see we hit the 23.6 right now. if we continue to go higher, we might potentially target 38.2% retracement, right? So even though there is a blue box here between 131 134, but you also need to look at it from the retracement point of view as well. If this is really wave 2, then actually wave 2 has enough space, a lot of space to correct, right? You can go to 50% even, or even 60%, because that can still be considered as a wave 2 without any problem, even if it goes to 136. So that means the key level really is this one, and this one is really the key level, not necessarily only the blue box here, right? The blue box might potentially see sellers or resistance, but the real key level, because this structure here could always change, right? This could become, let's say, I can call this 1, and then this is 2 as an expanded flat, and now in the wave 3 4 5. So I can call this a 5 ways up ending A, for example, if the structure becomes more bullish, and still doesn't change the idea that the overall view still remains bearish, as long as we don't break below this invalidation level here. So break above 146.5 here, right? Which is this one here, 146.5, and this one is close to this one as well. So these three levels here are really in the key level here for the bearish view of the market. Okay, so that's basically the idea for the XLY. And if you like to get more updates on the XLY or any other ETF, stocks, Forex, commodities, you can try our service. We have 14 days trial. The link is in the description of the video. So I'll see you all again next time. Have a nice day, everyone.